morning, everybody. So we'll get started with the next topic, which is IND AS 38, which talks about intangible asset. Again, a standard you have learnt in your CA Inter as accounting standard 26. So many concepts between AS 26 and IND AS 28 are similar. Maybe a few extra things you will learn in the CA final level. All right. Okay, the first thing is this standard applies to all the intangible assets except, first of all, what do we mean by intangible assets, sir? We'll go into the standard. What does intangible asset mean according to you? Intangible asset means something which you cannot touch, feel, see, etc. etc. Yes or no? Something which you can't touch, feel and all, we refer it to as intangible assets. Yeah. But standards are gazetted documents, sir. They are officially notified by the government. So they can't use this word or touch or feel and all. No, it look way too, it doesn't look sophisticated. Yes. So standards actually gives you kind of a proper definition. What you have understood is right, but we'll have to build it up from there and learn a certain other keywords. Okay. All right. Before I go into the definition, just like we learned in day 16, here also there are certain exceptions. Okay, some of the common examples if I have to talk about, or you tell me some of the common examples of intangible assets that you have come across. Some examples of intangible assets, can you give me? Okay, patent is an intangible asset. Great. Okay, then someone is saying software. Okay, great. Then copyright. Yes. Licenses. Yes, all these are some of the examples of intangible assets. Correct? Okay. Sir, this particular standard IND AS 38 does not apply to few things. It does not apply to few things. One, if you have any intangible assets which you are selling in the ordinary course of business. Let's say a software company. They produce the software and they sell it as part of their operations. They produce a software and they develop a software and they sell it as part of their business. That means that software is what? Is it an intangible asset now for them, or is it an inventory? It's an inventory, correct? Because they're selling it in the ordinary course of business, then inventory ka standard will get applied there. Okay. So if any intangible assets, if you're selling as part of your routine business, then AS2 will get triggered. If there's any deferred tax impact on these, on intangible assets, we'll learn what it is and all. That there is a separate standard called IND AS 12 that will get triggered. If you have leased any intangible assets, if you have taken any intangible assets on lease, or if you have given any intangible assets on lease, there is a specific standard on the lease, which is IND AS 116, that talks about it. Hence, it is excluded from this particular standard. And if there is any financial assets, don't worry. I think for the time being, we don't know what is financial assets. Leave that. There is a topic called financial instruments. Okay. So if intangible assets comes under the purview of financial assets, then that particular standard will get triggered there. Okay. And also goodwill arising out of business combination also gets covered under IND AS 103. Also, if you have any, okay, I think these are few things. Exceptions are not really that important from examination perspective, but it's always good to have a quick brush up of these. Okay. One, if you have any intangible assets that you are selling in the ordinary course of business, this standard will not apply. Then, if you have any deferred tax assets impact on them, this standard will not apply. Then, if you have leased any intangible assets, this standard will not apply. Financial assets, another standard is there, it will go there. Okay. Then goodwill that you get on business combination. Business combination is nothing but your amalgamation, sir. You have studied this as amalgamation in your CA Inter topic. One company purchasing another company ka business. One company taking over another company. We used to call it as amalgamation. In IND AS terminology, we call that as business combination. Okay. For business combination, we have a separate standard called IND AS 103. There it will get triggered. This I will spend a little more time with you. What is goodwill and all that stuff. Okay. Fine. Okay. So these are some exclusions. Now let's get to the meaning of the intangible assets. Sir, meaning is very important. Okay. If you know the meaning, many things or many misconceptions, you can sort it out. In our mind, intangible assets means something in which you cannot see, touch or feel and all. As I told, we cannot, standard does not define components like that. They give you proper things. Okay. So intangible asset means it should have three characteristics. Intangible assets means it should have three characteristics. One, it should be identifiable. Two, it should be a non-monetary asset. Three, without physical substance. What did I say? Intangible assets means it's an asset which has three characteristics or compulsorily all the three features. Identifiable, non-monetary asset without physical substance. You have to ideally remember this because in some of the case studies you may have to quote this if case studies comes through. Anybody any confusion so far? Woken up right? There so far, right? Yeah, they're saying good, sir. All right. So let's spend a minute understanding each feature of this intangible assets because once you know this, many things will get sorted. So what is the first feature of intangible asset I told, sir? Identifiable. Okay. Sir, if you want to say an intangible asset is identifiable, if you want to say identifiability feature is getting satisfied, no, then you should be able to separate that intangible asset and sell it. If you want to say intangible asset is identifiable, what did I say, sir? You should be able to separate it and sell it. Let's say there is one company, A Limited. Sir, they have a patent. Can they sell this patent? I'll keep asking you some questions. You keep telling yes, no, yes, no. There is a company A Limited. They own a particular patent. Can they sell patent separately? Only patent can they sell. Give me a response. Yes, patent alone, if the company wants, they can sell. Without selling company's business, can A Limited sell patent alone? Yes. They have a license. Whatever license, maybe whatever liquor license or whatever licenses is. Can A Limited sell license alone? They don't want to sell their business. They want to sell only one asset called license. Can they sell it? Yes. This is the characteristic of identifiability. If you want to say some component is identifiable, you should be able to separate them and sell it alone or in combination with few assets. Did you understand this meaning now? You should be able to separate it and sell it. Only then we say it is identifiable. Any confusion? No? Okay. Let me give you another example. Sir, is goodwill an intangible asset according to you? Is goodwill an intangible asset according to you? Yes. All right. Can this A Limited sell goodwill alone? Can A Limited sell goodwill alone? They don't want to sell their business. They want to sell only goodwill. You want to buy? ArivuPro has 10 crore goodwill. Okay. Or 1 crore goodwill. Or maybe 1 lakh goodwill. You want to buy? I'll give it to you. I'll write it on a piece of paper and tell you. ArivuPro's goodwill 1 lakh. I'll write it, sign it and give it to you. Will you pay me 1 lakh rupees? No, right? So can you sell goodwill separately, sir? Absolutely no. That means goodwill fails which criteria? Goodwill fails which criteria? Identifiability wala criteria. Goodwill fails. Since goodwill fails this particular criteria, for goodwill you will not apply IND AS 38. So whatever we are studying now, whatever provisions we're going to study now, those provisions are not applicable for goodwill. That's the first thing. Did everybody understand that? Everybody cool with this? Okay. So goodwill fails identifiability criteria because you cannot separate it and sell it. So IND AS 38 is not applicable for goodwill. Okay, so that's the reason we wrote it here. Check the goodwill that you get on business combination is not accounted as per IND AS 38. It is accounted as per business combination standard, which is 103. Okay, so what is this goodwill on business combination? You have learned this. If you want, I can give you a small example. Okay, let us say there is one company, sir, X Limited. They have purchased the business of A Limited. X Limited, no, they purchased the whole business of A Limited. All right, sir, A Limited, let's say, has assets of, let's say, 15 lakh rupees. A Limited has total assets, fixed asset, current asset, every asset put together. Totally, A Limited ka asset is 15 lakh. Let's say A Limited also has some liabilities to the extent of, let's say, 3 lakh rupees. They have assets worth 15. They have liabilities worth 3 lakh. Can you tell me what is the worth of A Limited? The net worth of A Limited? How much is A Limited worth? They have assets worth 15. They have liabilities worth 13. What is the worth of this company? Obviously 12 lakh rupees. Yes or no? Correct? Assets minus liabilities. This we call it as net worth, or we can also call it as net, or this in our CA Inter we used to call this as net assets. Remember those concepts, everybody? Okay, yes. Net assets of A Limited is 12 lakh rupees, meaning the worth of this company A Limited is 12 lakh rupees. But X Limited, no sir, they paid, let's say 14 lakh rupees to purchase A Limited ka business. Because it's a negotiation, no? If you are buying something means this is subject to buyer and seller ka negotiation. Okay. So A Limited asked for 14 lakhs. X Limited told no problem, take 14 lakhs and I will buy your business. Okay. This whatever A Limited pays to X Limited, we used to call it as purchase consideration, PC. The amount that you pay to the owners of selling company, we used to call it as PC, purchase consideration. Correct? Remembering this? Okay. Check. What is the worth of this company? 12 lakh. But how much did X Limited pay to buy the business? 14 lakh. That means think from X Limited perspective. X Limited made a profit or X Limited made a loss? X Limited perspective. X Limited made a profit or loss? Loss, because worth of the business is 12, but they paid 14. So that means they paid extra. How much extra, sir? They paid 2 lakh rupees extra, correct? That extra only we call it as goodwill. We don't know why we paid this 2 lakh extra for. Because it is not related to one asset. It is rather related to business as a whole. For accounting purpose, accounting standard 14 that you did when you did amalgamation, they told whatever this extra, you treat it as goodwill. Got it, everybody? This is how you get goodwill in amalgamation, or for that matter, business combination. Okay, there are some other extra steps also, which I'm going to talk about when I do IND AS 103 little later. Okay, so this goodwill that you get is not accounted as per IND AS 38, it is accounted as per IND AS 103. Hope everyone is fine with that particular concept now. Any doubts anybody has, or can I proceed? Clear, sir. So the only thing that we have learned now is identifiability. To say something is identifiable, what you should do, sir? You should be able to separate it and sell it. And which particular asset fails this criteria? Goodwill. Okay. All right. To say another features of identifiability, it's all there over here. Okay. One, it should be separable, or two, it should arise as part of contract or a law. To say something is identifiable, it should arise as part of contract or a law. Either you should be able to separate and sell it, or it should arise as part of contract or law. Meaning, I'll give you a small example here. Excuse me. Sir, I'm an airline industry. Let's say I'm Indigo Airlines. So that means I have hundreds and thousands of aircrafts. Okay. Or let's go one step back. Sir, I have a car or I have a bike. Okay. Can I take it to the airport and park it there only? I thought, okay, fine. Anyway, I have to catch a flight from, let's say, Bangalore to Bombay. I took my car or bike. I took it to inside the airport and I parked it near the aircraft spacer inside the airport. I told I only am paying tax. Government is mine only. So I will park my vehicle. Anyway, I'll come after 2 days. After I come 2 days, my vehicle will be waiting there. Around I will take my vehicle and get back home. Can everybody just take their vehicle and park it inside the airport, sir? Is it possible? No. That means to operate that aircraft premises, no. If Indigo Airlines, if they want to park their aircrafts, if Indigo Airlines, no, if they want to park their aircrafts inside the airport, they should get something known as, or they should have something known as landing rights. That rights government will give you. That rights government will give you. Anybody who's in the airline industry, as per the law of the country, they are entitled to get what? Landing rights. Is it okay? So that is what I mean by something which arises as part of a contract or a legal rights. Understood the meaning of it? Something identifiable means it should either come as part of a contract or legally it should come. This is one of the examples. This is your legal right. Okay. Or government will, the aviation authority will give this landing rights on a piece of paper. Okay. So you could say it as arising as part of contract also. That is. Confusion or move forward? First feature according to me is done. If you have any confusion, we will, if you have any questions, I will take it, or we'll go for a question. Forward march they're telling. Okay. Let's go for the first question. Let's say how much you have understood. Question number 1. Here we have a concept and then we have a questions. Let's look at it. Sun Limited has expertise in some consulting business. In the past years, company has gained a market share of 30%. So about 30% of the customers in the market, they transact with Sun Limited only. And this company Sun Limited is considering recognizing this market share as an intangible asset. Is the company ka action justified? The customer has acquired, there are about 30% of the customers in the market who belong to Sun Limited. That market share, the company wants to recognize it as an intangible asset. Can they do so? No. Why? Sir, which feature did we just now learn? Identifiable. What do we mean by identifiable? Something, if you want to say something is identifiable, either you should be able to separate it and sell it. Can the Sun Limited sell the market share? Like, let's say about 5% of CA students in India are studying from ArivuPro. 5% of the students in India are taking course from ArivuPro. Can we sell that? Can we sell it to anybody? No, right? Can we sell that separately? If I want to sell that, I have to sell my whole business. Yes. If you want to sell it, I have to sell my whole business. Can I sell that portion alone? No. That means which criteria this particular thing is failing. Which criteria this is failing? This is not separable, meaning it is not identifiable. So if it is not identifiable, can you recognize it as an intangible asset? You cannot recognize it as intangible asset as it is not identifiable. That's it. Forward march. Got it? Yes, they're saying. Okay, so first feature is done, which is identifiable. What is the second feature, sir? Non-monetary asset. Okay, sir, asset we already know. Asset means what, sir? Tell. What do we mean by asset? Asset means, what are the features of asset? Sir, only legal rights comes under B point, sir. No, legal and contractual, both comes. Contract or legally, both are covered. Fine. Okay, coming back to this. Asset means what, sir? Asset means it's a component which is within our control, from which we will get all the benefits and restrict others from getting the benefits. This is what we had studied. Okay, and in India 16 we had studied human beings are not assets because we have no control over them. Yes. So asset ka definition is given over here. Asset is an economic resource controlled by the entity. Asset is an economic resource controlled by the entity, from which the company will get all the benefits and it will be able to restrict others also from getting the benefits. That's all. Fancy name. I think we know the meaning of this. Yes, you've already studied this. Basically, a component should be within our control, from which we will get all the benefits and we can restrict others also from getting the benefits. You can remember it like that. All right. So, intangible asset should be a non-monetary asset. This also we have learned. Sir, monetary means what? We had studied two component. If you remember, MI, NMI, we used to call it. Monetary asset means, in layman terms I told, the value is fixed. Perfect. In monetary item means the value is fixed. What are the examples of monetary item I told you? Cash is an example of monetary asset. Debtor is an example of monetary asset. Creditor is an example of monetary asset. Loan given, loan taken, all these are, their value is fixed. Hence, they are example of monetary item I had told. Similarly, what is non-monetary item then? Value is fixed or value fluctuates? Value fluctuates. Some of the examples of non-monetary assets are what? We had already discussed this. One is your property, plant and equipment, intangible assets, investment, inventory, etc., etc. Yes or no? Obviously, yes, sir. Intangible asset is a non-monetary asset. If you buy a software by paying 50 lakh rupees, let's say you can use it for 5 years. You purchased it for 50 lakh, you can use it for 5 years. For all the 5 years, its software ka value will be same or it can fluctuate, or rather it will fluctuate. It will fluctuate, yes or no? Most probably value will reduce. In some circumstance, value may increase also. Okay, when we talk about fluctuation, fluctuation could be on the increase side or decrease side. So intangible asset ka one of the characteristic is it should be a non-monetary asset. I think this we have discussed in PPA as well. So this is good enough. Can we take up a case study? Okay, come to the second one, sir. I'll not worry about the examples now. Or maybe we'll talk about this. These things, no sir, are not assets. They've given few examples of components which are not assets. Training cost given to employees. I think this we have already studied in India 16 only. If you have given any training to the employees, let's say there is a software, GST or whatever, you gave some training to the employees to make sure that they are ready to use the software. Can we capitalize training cost? We had studied this also. I had given you an example of pilot, I think. Yeah, aircraft ka pilot. No, why? Because software is already ready for use. By giving training to the employee will become ready to use the software. I had told you, yes or no? And moreover, you have given the training to employees, human beings. Can you have control over them? Can you have control over human beings? No, there is no control, because today that employee may be working in your organization. Tomorrow he may quit and join some other company. So that means over employees, do we have control or no control? On employees, we have no control. Sir, if you have no control, will it be an asset, sir? No. For you to call something as an asset, it should be within your control. Human beings, we don't have control. So obviously, training. Just 1 second. Just 1 second. I think the video went off, no? Just 1 second. Connection failed ಅಂತ ಬರ್ತದೆ. ಕರೆಕ್ಟ್ ಇದೆಯಲ್ಲ? Guys, you are able to see now? Yes, as I was saying, on human beings, we have no control, hence it is not an asset. So if you have given any training cost to the employee, it will not be capitalized. Rather, these expenses will be transferred off to directly to SPL. Okay. Market share. Market share is also not your asset because you have no control over it. Because customers, no sir. Today, maybe the customers like your product, so they are buying they're buying your product. If tomorrow, if competitor ka product is better, they will stop buying your product and buy competitor ka. Yes or no? Customer behavior and all, can we control? Difficult. Yes or no? So do we have control over the customers? No. Hence, market share, customer loyalty, all these are also not intangible assets because we have no control over it. These are all dynamic factors. Okay. Today, you guys are buying classes from ArivuPro, maybe because our quality of lectures is good, maybe our price is reasonable, etc. etc. Okay. Is it true that after 2 years also people will buy class from us? That depends. Yes or no? If students still like our classes, they will buy. If they like somebody else's classes, maybe they'll buy somebody else's. Yes or no? That is the thing. Any confusion? Hence, these three things are not asset. If they are not asset, then obviously you cannot recognize them as an intangible asset itself. Can we get to the case studies? Here it's all small concept, guys. And many things. The one good thing about Ind AS 38 is many concept of Ind AS 16 will get repeated here also. Okay. So you will see this in future. Okay. Second question is all yours then if you have understood. the company XYZ Limited has provided training to the employees to various topics like GST, IND AS. Okay, can company recognize the staff training cost as intangible asset? Just now we learned. Can you recognize training cost as intangible asset? No. Why we cannot recognize? Why we cannot recognize? Because it is not an asset, because it is not within our control. You'll write like that. It is not an asset which is within company's control. Hence, this training cost and all, where it will go off to? It will straight away be transferred to SPL. Easy peasy. So this question and all will come in exam, sir. We don't know. Now it's all MCQ pattern, no? So they may incorporate these sort of small concepts also in a particular case study and give you. Okay. How case study can ask, nobody can predict, sir. Because case study, I think they will combine multiple IND ASs and make a case study. So small concept from many IND ASs they can pick. So institute ka, what do you say, like, the way they can frame the question now, that base is significantly increased. Anything could be asked. So all you have to know is know everything. Simple. Okay. How institute will ask, that is their headache. Let them worry about it. We will worry about learning the concepts, remembering them, applying them, etc. etc. That is our headache, and we will do that diligently. If we do that, then examination, obviously, we shall clear aram se. Okay. Can I go for next question? Alright, two characteristics we have already studied, sir. What are the two characteristics again? You type in small one word for me. Intangible asset means first it should be an I as in identifiable. Two, it should be a non-monetary asset. Okay, when can you say it is identifiable? If you can separate it and sell it, or it should arise as part of contract or a law. Goodwill fails identifiability criteria. Two, it should be a non-monetary asset. Asset means it's a resources which is controlled by the entity, from which they will get all the benefits and restrict others from getting the benefit. Okay, and non-monetary asset means the asset ka value will fluctuate. The third feature of intangible asset is without physical substance. So without physical substance means what? Now your that feelings will come. Which is what? You cannot touch or feel and all that. Okay, that they're calling it as without physical substance. Without physical substance. Okay, 1 minute. I think it's there somewhere here. Where is it? It's not there. Okay, here it is there. Okay, no problem. Sir, without physical substance, okay, I'll give you an example. The standard is using the term without physical substance. I'll give you a small example. Let's say A Limited, they purchased a software by paying, let's say, 10 lakh rupees. They purchased the software by paying 10 lakh rupees. Sir, this software, was delivered to A Limited. A Limited got this software through a pen drive. The software was given to A Limited in a pen drive. Now you tell me, this intangible asset, does it have physical substance or it does not have physical substance? No physical substance means you should not be able to see, touch, or feel and all. But it came in pen drive. Pen drive I'm able to see. Pen drive I'm able to see. So is this software still an intangible asset or not an intangible asset? Still, is the software still an intangible asset or not an intangible asset? Still an intangible asset only. How? Sir, don't literally interpret this term without physical substance. Without physical substance does not mean it should not have physical substance at all. No. What they are trying to say is some intangible assets could have some physical substance also. Okay, this is your physical substance that they're talking about. But the value of this physical substance, is it significant or insignificant? The value of this pen drive, is it significant or insignificant or immaterial? It is immaterial. Yes or no? That is what they mean by without physical substance. Meaning the company is buying software. They're paying 10 lakh rupees. They're paying 10 lakh rupees for the software component or pen drive component. They're paying huge sum of money not for pen drive. They're paying it for the software. Okay, so the value of this particular physical component, when you compare it to the transaction as a whole, it's very, very insignificant or immaterial. That is what they're trying to say. So hence, this software will still be classified as an intangible asset. Great, everybody, did you understand it? So intangible assets could also have some physical substance, but the value of that physical substance is very immaterial. Okay, like if you wrote a book, okay. and you have copyrights over them because you wrote it. No, it's your intellectual property. Now, book and all, you'll write it on a piece of paper. You'll write it on a piece of paper. Yes. Is the book visible? Is the book visible? Yes. Okay. Does that book have a value or its content has a value? You may take a 100-page notebook and write this. For 100-page notebook, maybe you would have spent 100 rupees. You spent 100 rupees and you purchased a 100-page notebook and you wrote something in it. So is notebook having the value or its contents is having the value? Its contents is having the value. Yes or no? So that means the copyright that you have, okay, that copyright that you have over the book, though the book is visible, the value of this book is very insignificant. That is what I'm trying to say. Got it? Any confusion or proceed? Clear, sir. Okay. Sir, what if physical is the tangible element? Yes, no? Physical component is a tangible element. Okay. Sir, what if a particular component has both tangible and intangible elements, sir? Like, to give you an example, let's say you purchased a laptop, sir, by paying 1 lakh rupees. You purchased a laptop by paying 1 lakh rupees. Sir, laptop means it will also have some inbuilt software, sir. Laptop means obviously it will have some inbuilt software like Windows, VLC player, etc. etc. Some softwares could be preloaded or pre-installed already. Yes. That means this 1 lakh that you have paid, this 1 lakh has a laptop element which is tangible and Windows element which is intangible. This is a software. Yes, no? Now, how should I treat this 1 lakh rupees? How should I book this 1 lakh rupees? Should I book this 1 lakh rupees as a tangible asset? If you book it as tangible asset, then it is PP, IND AS 16 will apply. If you book it as a software, then IND AS 38 will apply. So this 1 lakh rupees, what should I book it as? Tangible or intangible? IND AS 16 or IND AS 38? What according to you? Because this particular thing laptop has both tangible item and intangible item. What do you book it as? Perfect. Sir, if a particular component, some of you are answering, great. Okay. Sir, excuse me, if a particular component has both tangible, this is your tangible component and this is your intangible component. If particular component has both tangible and intangible element, check which is the dominant element or which is the significant element. In this, which is the significant or dominant element, you just check. Sir, you purchased the laptop because it had Windows software or because of its tangible component? You're purchasing the laptop for the software component or the hardware component? Your main intention of buying the laptop is towards the hardware component. Yes or no? That means in my example, which is the dominant element? Intangible or tangible? Which is the dominant element? Dominant element is tangible item. So if the dominant element is tangible item, then you treat it as PP itself and IND AS 16 apply. Meaning the entire 1 lakh, you book it as PP and IND AS 16 gets triggered. Like that. Are we fine? Okay. Fair enough. However, if you're buying, now in this example, the software that you purchased through pen drive, this also has both tangible and intangible element. Tangible element is pen drive, intangible element is software. In this particular component or in this particular transaction, which is the dominant element? In this particular example, which is the dominant element? Software or pen drive? Software is a dominant element. Yes or no? So that means entire 10 lakh will be booked as an intangible element. Like that. This involves materiality, judgment. Okay. You should be able to judge which is the dominant element and accordingly do it. If you conclude, sir, what if both are dominant, sir? If both are dominant, you need to separate it. Partially you will book it as tangible, partially you will book it as intangible. Very rare, but just saying. If you can prove it like that, both are important, both are necessary, then segregate on some basis. Okay, there is some judgment involved over here. Understood, everybody? Okay. So this is your without physical substance wala component. Okay. So 3 features we have already studied. Identifiable, non-monetary asset without physical substance. Great. Sir, what was the recognition criteria of Ind AS 16 property, plant and equipment? Recognition criteria of Ind AS 16? Feb and cost measurement. Yes or no? Ind AS 38 ka recognition criteria is also same. If you want to recognize intangible asset in the balance sheet, it should have the same recognition criteria, that it should have a future economic benefits and cost of the intangible asset also. You should be able to measure it reliably. Same, no change. Fair enough. And does future economic benefits mean only increase in revenue? No. Increase in revenue is a future economic benefit. Decrease in cost is also future economic benefit. Other indirect benefits are also future economic benefits. Okay, that they've just justified it over here. Okay, recognition criteria is the same, sir. No change. Can I move forward? Okay. Come to question number 3, everybody. This, let me see who gets this right. Don't look at the solution. Only look at the question and try to answer. Pluto Limited intends to open a new retail store in a new location in the next few weeks. They have not yet opened. They're planning to open. Pluto has spent a substantial sum of series on television advertisements. Excuse me. To promote this new store. They have run some advertising campaign. They have spent 8 lakh rupees for the advertisements before March. 7 lakh of this sum, meaning 7 lakh of this 8 lakh rupees, relates to advertisements shown before 31st March 20x1. Totally, you spent 8 lakh rupees. So, you spent advertisement means the advertisement should be aired somewhere, maybe in FM or your TV or whatever. So, out of 8 lakh, 7 lakh worth of advertisements got aired or got shown in the TV or wherever in the current year itself. 1 lakh advertisements will be shown in the next year, that is April. Okay, that means can I say this is a prepaid expenditure? Can I call this as a prepaid element? Totally, I've already spent 8 lakh, but the entire 8 lakh advertisement got showed in the current year itself? No. Only 7 lakh got showed. So 1 lakh is still pending, but I've already paid for it. Yes, so this is a prepaid element. 1 lakh will be shown in April. Okay, the company has paid a further advertisement cost of, or in fact, since 31st March 20x1, meaning next year, you could say from April onwards, they have spent a further 4 lakh rupees. So totally they have spent about 12 lakh rupees. 8 lakh they spent it in the last year, okay, in 1 year, and 4 lakh they have spent it in another year. Totally 12 lakh they have spent. Now this company, Pluto Limited, is of the view that such cost can be carried forward as intangible asset. They want to book this cost as an intangible asset. Since market research indicates that the new store is likely to be highly successful, please explain and justify the treatment. So can you treat advertisement expenditure as an intangible asset? Can you treat advertisement expenditure as an intangible asset? Current year you spent 8 lakh. So in the current year, can you book 8 lakh as an intangible asset? In the next year you spent 4 lakh, further 4 lakh. So that means in the next year, can you show 8 lakh plus 4 lakh? That is 12 lakh as an intangible asset. No, sir, recognition criteria is not met, somebody is saying. Okay, any other justification, anybody? No control, no feb. Perfect, sir. Sir, they can give whatever goalie. Now you think simple example. I'll give you, forget about this. Someone is saying not identifiable also. Great. Okay, one, it is not identifiable because now, okay, maybe I'll take that first and then go for this. Sir, let's say Pepsi, they did an advertisement campaign. Pepsi did an ad. Okay. They hired some people and they made the ad. That ad belongs to them. There is another company, Coke. Can Pepsi sell this particular ad to Coke, sir? Can Pepsi company sell this particular advertisement to Coke? No. That means, can advertisements be sold? Probably no, because advertisement is company specific. Yes or no? That particular advertisement relates to that particular company only. Can you separate it or sell it? No. That's the reason you could say it is not identifiable. Are we fine with this? Another reason is, check here, the ArivuPro. We ran some advertisements in YouTube, Telegram, Instagram, wherever. We ran ads, sir. Let's say we spent about, 2 lakh rupees for advertisements. Google ads, this ads, that ads we spent. Okay. Let's say after advertisements, Let's say 100 students purchased our classes. After we ran advertisements, we saw within the next week or next month, 100 extra students have purchased our classes. Can I say 100 students purchased our classes only because of advertisements, sir? They just saw our advertisement and they have purchased our classes. Is it so? If 100 students purchase our class means we will get some money, meaning we will get some benefits. Can you touch your heart and tell this benefits is coming only due to advertisement? The benefits that you are getting by 100 students purchasing our class, is it coming only due to advertisement, sir? Or it is related to business as a whole? Is this advertisement related only to advertisement or it relates to business as a whole? It relates to business as a whole because students purchase our classes not just because of advertisement. Okay, they will check our demo classes. They will see what is the quality of our classes. What is the price of our classes? Yes, they will check competitor classes. They will compare. Yes or no? After that, if they still like it, then only they will buy. Correct or no, sir? So that means the benefit that you get to know is not just from the advertisement. It is from the other business factor also. Okay. So hence, as a thumb rule, IND AS 38 says, if you have incurred any advertisement expenditure, promotional expenditure, etc., that those expenditures should be capitalized as intangible assets now or should be transferred to SPL. They should be recognized as an expense in SPL. Did you understand now, sir? One, it is not identifiable also. Two, the benefit that you get from that is not just from that advertisement, rather it relates to business as a whole, like that. That you can write, those specific words you can write. Fine now? You want me to give some words for you or you got this? Just two things, right? Not identifiable and benefits relates to business as a whole and not just from advertisement. If you want any one-liner, short answer I can give you. If you feel you have got it, I'll move on. Only these 2 pointers, 1 and 2. That's it. Okay, they're saying got it, not required. Fair. Awesome. So somebody saying, sir, entire expenditure, don't book it now, sir. Correct. Though you spent 8 lakh rupees in the current year, entire 8 lakh, can I book it as an expenditure? No. Out of this 8 lakh, I can only book 7 lakh as an expense in the current year. Why? Because only 7 lakh of advertisement got showed or got appeared in before the public. No. So what is this 1 lakh? 1 lakh is your prepaid expenditure. Show it as prepaid in the current year. Next year, you book it as an expense. Fair enough, everyone? Valid point. Okay. Next year, you spent further 4 lakh. So that means how much will you book as an expense? In the next year, you will book 4 lakh expense, which you already spent, plus 1 lakh relating it to the last year. Last year, it was prepaid, no? So next year, it will be shown. So totally 5 lakh, you will book it as an expense in the next year, like this. Any problems? Clear, no? 100%? Getting it right? Everybody? Got it, they're saying. So we are super smart. What do you think of us? This and all we know, we knew it in our bachpan only. Inter only we have studied all this. Correct, no? Okay, there's nothing for us. Okay. Sir, if you remember in days 16, there were some replacement parts, you know? Replacement parts. Further inspection, major repairs, etc., etc. What did you do? For major repairs, overall, replacement parts, what did you do, sir? If recognition criteria was satisfied, you capitalize those expenditure. Correct or no? If recognition criteria was satisfied, you will capitalize those expenditures. Same thing goes here also, sir. Okay? This requirement. If recognition criteria is satisfied, if you have replaced any, for intangible assets, generally replacement and all are pretty rare. Okay? Suppose you say software has many parts. If you are replacing any part, if at all it is there, then if recognition criteria is satisfied, go ahead and capitalize it. Otherwise, that further expenditure also will go up to SPL. Same as India 16, no change. Okay. But however, if you have incurred any further expenditure on brands, masthead means logo, publishing titles, customer list, etc., etc., then you don't capitalize, rather you transfer it to SPL. This is a specific guideline given. Okay. If you have done any further expenditure on these things, brands and logos and all. So let's say this is our logo right now. Correct? You are able to see on my shirt, no? ArivuPro logo. Currently, it is in this color. If I change my logo, If I change my logo color, I brought in, let's say, some shades of blue or gray or green or whatever. I changed some shades, color shading I did. Okay, fair enough. Let's say I already have a logo. All right, fair enough. I spent another 5 lakh rupees for some changing some structure or color of this logo. Okay, can I capitalize this 5 lakh, sir? Can I capitalize this 5 lakh as an intangible asset? No, because the benefit again that you get from this further expenditure, you think practically, maybe by modifying the logo, you may get some benefits. It's possible, all right? But you tell me, the benefits that you get from those, is it related to this logo alone or business as a whole? The benefit that you get further, is it related to logo alone or business as a whole? The business as a whole, yes or no? Because see, initially my business is not set. I would have had one logo. If I'm modifying logo, means the business is probably already set. Okay, so the benefit that you get is not just from this particular expenditure, rather it is related to business as a whole. Okay, generally this is also subjective. Okay, hence standard has taken a thumb rule that if you have done any further expenditure on these components, transfer it off to P&L. Debatable practically. Okay, but theoretically they say this benefit is not just from this particular asset. The benefit that you get from these subsequent expenditure relates to overall business, hence transfer it off to SPL. Do not capitalize as intangible asset. Again, they can give you a small case study on this, so just remember it. Practically, again, this is debatable, sir. Okay, theoretically for exams we will follow this particular purpose because there is a judgment involved there. If I can prove that no, subsequent expenditure is giving me this much benefit and it relates to that only, if you can clearly pinpoint, then you can capitalize practically. Theoretically, do not bring this. For the examination, don't bring this in. Transfer it to SPL. Okay. Fine now. Yeah, it is like Goodwill. You can see it like that. These are all internally generated. Yeah, we'll also talk about that. Correct. It is like Goodwill, they're saying. Fine. Understood. Thank you. Next question then. All right. Mercury Limited is preparing accounts for the year ended 31st March. It is unsure about how to treat the following expenditure. So the company completed a grand marketing and advertising campaign of 4.8 lakh. Sir, I will not even bother reading further. Here only I got my answer. Is advertisement expenditure intangible asset or SPL? Advertisement expenditure, IA as an intangible asset or SPL? Straight away goes off to SPL. They can give whatever goal. From this advertisement, we will give 1 crore benefit, 10 crore benefit, no benefit, doesn't matter. They can give whatever goal. The moment I see it's a promotional activity, advertisement expenditure, I can stop there only and conclude that this is an SPL. It's an expense. Okay. That's what they're saying. It will create additional 8 lakh benefits. That is irrelevant for me. This will go off straight away to SPL. Second adjustment, let it be on hold. There's a small concept. I'll do it now only. After I do this concept, go through this question, you'll understand it. For now, let this be on hold. Staff participated in a training program which cost the company 5 lakh. I don't have to even read further. Staff ka training cost. On the staff is a human being. On human beings, we have control or no control? Staff, no control. That means this 5 lakh also is what, sir? They can give whatever goalie, it will go after SPL. Yes, no? The training organization made a presentation to the directors of the company, and that due to this training, there will be incremental profits to the company to the extent of 7 lakh. All goalie. Training cost, no control, SPL. Simple. Extra thing, let them give whatever. But in our mind, we are already fixed. Yes or no? So that is the answer. Carry on. Or any doubts? Okay. All right. Measurement of intangible asset. Sir, you tell me, this again we have studied. Initially, all the property, plant and equipments in day 16 are measured at what? Initial recognition I'm talking about. Initially, all property, plant and equipment are recorded at cost. Same thing here also. Initially, all intangible assets are measured at cost. What was the cost for PPE purpose, sir? We had categorized as 3. Can you tell me? The cost for tangible assets, we had PPE, we had categorized into 3 things, 3 parts. One is purchase cost element. Another one is DAC, directly attributable cost. Another one was DSR. Yes or no? These are the 3 charts I had put there. Here, what do you think will be there? Here, what do you think will be there? Only 2 or 3? Will intangible assets and all have DSR, sir? Will you have to restore any site or any damages due to intangible assets? No, right? So here, what will be the cost for initial cost for intangible asset? Purchased cost and DAC. And a purchase cost also, same funda. If you have any import duty or non-refundable taxes, add it. If you have any trade discounts or rebate, reduce it. No change. All this we have already studied. No? Same as PP. There's no change. That's the reason we spent a little extra time there. There we have studied so many concepts. We'll keep repeating this and all. We can speed up. Hope everyone is okay with this. Everyone is able to remember or recollect all this. Okay, great. DAC means what, sir? What is the full form of DAC? Full form of DAC is directly attributable cost. So what did you say for DAC for PP was? Directly attributable cost are those costs incurred to bring the asset to the present location and to the present condition so that asset can function in the way as intended by the management. Okay. There DAC was present location and present condition. Here also you will use the same word, present location and condition, or only condition? Present location and condition or only present condition? DACs are those costs incurred to bring the intangible asset to the present condition. Sir, intangible assets you cannot see, no. Property, plant and equipment means you will incur some transportation charges to bring it to your factory. Yes, no. Intangible assets and all, you will incur some transportation cost. No, right? Hence we say directly attributable cost are those costs incurred to bring the intangible asset to the present condition so that intangible asset can function in the way as intended by the management. Cut off the word location, rest everything same. Any problem? No? Then you give me an example of DAC for intangible asset. Let me see. You said you understood. Give me an example of DAC for intangible assets. What example can you think of? Don't look at the books. They're like that only. What could be an example? Installation charges. Perfect. If you are paying any installation charges for software, perfect. Unless you install the software, can you use the software? Can management use the software without installing? No. So installation charges are necessary so that software can function the way management wants it. Perfect. Someone is saying updation. I will call it as customization. Software is ready, but this particular company, they want to customize the software and then use it. So customization charges. Okay, because that means what, sir? Those costs incurred to make the asset management ready. The way management wants to use the asset, it should have reached that condition. The way management wants to use the intangible asset, that condition should have reached. Okay. So before customization, will management use the intangible asset? They purchase the software. Will they use it right away? No. First, they want to customize it as per to suit the needs of the organization and then use. Yes or no? So only after you incur customization charges, asset will be management ready. Correct? So customization charges also will be treated as a DAC. Comfortable, everybody? Someone is saying legal fees. Yeah, legal fees. If you have hired some consultant, because there could be many softwares. No, you are not sure which software to buy. You took some consultant to help. Okay, so that consultation charges you can add. Some legal fees if you have. Sometimes patent and all, we need to register. So there could be some registration charges. So those things and all could be considered as a DAC. It'll all come in the example. Just say. Yes, many of you are answering. That is awesome. Yes, whatever you're saying, correct. These are all your DAC for intangible. So one more also you can bring in. If your own employees are developing a software, means you did not purchase the software. You are developing your own software and your own employees are developing. That means that employee benefits or employee ka salary, will you transfer it to SPL or it becomes DAC for software? Did you understand the question? The employees who are working on developing a software for your own company, that employee ka salary will not be transferred to SPL. Rather, it will be considered as a directly attributable cost and added to the cost of intangible asset. Easy. Easy. One more if you also, you could or maybe that I'll take it later. Fine. All right, so these are your components. That's what they have given over here. So that's purchase price, including import duty, non-refundable taxes, deduct any rebates, and any DAC if it is there, add it up. DAC are some examples they have given. Employee benefits. Employee benefits here means salary. If your own employees are developing the software, then such employee ka salary, do not transfer it to SPL, rather add it to the cost of intangible asset. Professional legal fees, testing charges. Before you, if you're developing your own software, or for that matter, if you have purchased the software, first you will test and then only you will start your actual activity. Yes or no? So testing charges, can you add? Yes. But one more related point you tell me, let's say, may not be there for intangible asset, but still I want to know whether you remember it. There was one more corresponding point relating to testing. What was that? Corresponding. Perfect. Sir, you have done some testing. Maybe testing was a failure, but if you have any proceeds from the product sold, proceeds from the tested products sold, you remember that Biocon example? Okay, fair enough. You did some testing charges one. Testing charges one was failure, but you still got some product and you still sold that sample product and got some money. Correct? So that proceeds, if you have, pretty rare maybe for intangible asset, but still, if you have that proceeds, what you should do for this proceeds? Yes, some of you have told the answer. What should we do for this sample products ka sale proceeds? That we need to deduct from the cost of intangible asset. Perfect. Same as PP, no change. Okay, awesome. That means the revision is happening on a daily basis. You are able to remember. That's nice. And also, guys, revision, no, always do it cumulatively. What do I mean by cumulative? Like, day one, we studied few concepts. Day one, you will go home and do the same revision. After day two ka class is over, revise day two ka class and also quickly try to revise day one ka class also. Okay, like this, once the full chapter is over, full chapter ka revision try to do. Like this, if you do cumulative revisions more and more often, no, you'll remember the concepts for a lot longer, and this will not become, your mind will not become a pressure cooker on the examination day. Just revision. I understand you have articleship commitments and all, but trust me, on the day one, I made one promise to you saying what? I'll make sure that I'll cover maximum in the class itself. I will reduce your burden as much as possible. I will just take 30 to 35 minutes of your time for revision. Is that happening? If those of you who are seriously taking that and revising, is it taking more time, or you are able to revise within 30 minutes? According to me, it should be a lesser, but are you able to do it within that time, at least 30 to 35 minutes? Is it happening? Guys, yes. So that much commitment, try to keep it up. Yeah. So that's all I'm expecting from your end. So that both of us will sail through this journey. Okay. Because see, for me, the thing is, if I quit this teaching and join corporate, no, I will earn much more income. It is not the money that drives our this. We have come into this teaching line because we would like to contribute to your success. It really feels nice when some of the students comes to us and say, we got exemption, we became CA. Okay, like this, when someone says, no, that gives us much more happiness than the money over here. To be honest, every teacher can earn a lot more money if he goes in the corporate. Fair enough. Okay. So, but still, so this is what kind of drives us into this particular thing. So that what drives me also. So please make sure that we see the words pass in the result card, come what may. Okay. Another maybe few more months, hardly maybe another 6 to 8 months efforts if we put it. Okay. I don't know when you are writing your examination. A few months of efforts can see us being a chartered accountant. Okay. After qualification, you don't have to study like this. Yes. So it's a one-time exercise. Go through the journey, keep the confidence high. Don't get bogged down by people who say like, this is difficult, that is difficult and all. If someone says it is difficult for them, not for you. Okay. Our attitude should be like, I'll do it no matter what. I have taken this course. I will do what is required and I will compulsorily sail through. Keep that attitude in mind. If you keep that attitude, any problems you can easily tackle. Okay. Or if you're kind of a person for small things and all, oh, this is difficult. I'm not able to understand this topic. I have to wake up early morning 4. My boss is asking me to work for 10 hours. For every small things in life, if you start freaking out, no, every day will be horrible. Trust me, even after CA also. I've seen many people. Even after CA also, they're not happy. Because attitude is not good. For every small things, they go on cribbing. This happened in my life, or he left, or my girlfriend left, or boyfriend left, or wife happy, husband not good, or children not good. They have something or the other to crib every time. Okay. Those persons will never be happy. Okay, just take it as an experience. You are right now in the study phase. Study, that is also an enjoyment, that is also an experience. Go through with that. Once you have done, you can move on to the next phase. Probably that is your working phase. You will get a lot more money. You will be able to experience the world tours, etc. etc. That is also experience. Take it like that. Chill madi, okay? Just like sometimes our classes, no, you listen from here and leave it from there, no? Problems also in life do that only. Here from this side, leave it from that side. Don't keep it in here, okay? If you can do something about the problem, do it and sort it out. If you can do nothing about the problem, ignore it. That's all. Chill madi, be happy, okay? Yes. Can we come back to the concept? Yes, saying got it. How much will you drill? Yeah. All right. So these are your DAC examples. So cost, these are about your cost inclusions. Sir, have you already studied cost exclusions also, sir? Have you studied cost exclusions in Ind AS 16? Yes, we have studied also. What are those cost exclusions? Tell me. First one is what? General administrative overheads. Then selling and distribution overheads. Abnormal loss. Relocation cost, reorganization cost, redeployment cost, training cost. Perfect. Yes, initial operating losses. Yes, routine repairs. You can add a few more over here. Okay, all this also will continue for intangible assets. Few more you can add over here. What are those? Advertisement expenditure, customer loyalty, market share. All these are also cost exclusions. Understood? Same as PP, you can add a few more like customer loyalty, market share, etc. etc. Those becomes your cost exclusions. That's what they've called out over here. They've called out less, but we have studied a lot more. Nana people, this and all, no, nothing new. Same as PP. Rinse and repeat. Move forward to the next one. If you want me to repeat anything or go slow or any further explanation, please do not hesitate. Okay. Since many things are same, so I'm thinking I can proceed a little further. So what about shares purchased from broker? Are they intangible assets? No, sir. Shares are not intangible assets. They are financial assets. We'll talk about it. There is a topic called financial instruments. There we'll talk about it. What are the financial assets and all? We have not touched upon it. It'll come there. They are not intangible assets, to answer your question. Sir, customer loyalty I did not get, sir. 1 minute. Okay, so it is Lipika's question. So let me take Lipika only. Lipika, currently you are studying with us, Noma, ArivuPro. Okay, so that means currently your loyalty is towards us. Can I say so? Your loyalty is towards ArivuPro. So can I book your loyalty as an intangible asset? Can I book your loyalty? Because continuously you're buying class from us. I think you are our inter student only, if I remember right. I remember remembering Lipika in Inter. Correct. So from Inter, see, you are being so nice to us, so generous. You bought our Inter class also. I don't know foundation, but yeah, I definitely remember seeing you in Inter. So you are our Inter student. Now you are studying final also with us. So you are so loyal to us. Correct or no? So your loyalty, can I book it as intangible asset? Someone is saying, Kamesh is saying, I am also, sir. Oh, okay. Since it was her doubt, I took her name. All right. He's saying, I am there from foundation. Thank you. Good. Nice of you to so. That shows that we are also probably on the right track. Thank you so much for trusting us. Deeply humbled. Okay, coming back to her question. Lipika, can I show your loyalty as an intangible asset? No. Correct, no. Maybe in intermediate, no, you liked our classes. In CA final, no, I start saying nonsense. Nothing you're understanding. Just imagine. Then what will happen? Will you still buy our final classes now? Or now you'll shift to another academy, or you'll buy some other faculty class. If I start talking nonsense, chumma I come and say, hey, this is nothing, da, you only take care. Like that I will tell. I leave the screen, nothing I'll do. Chumma aram se I'll sleep like this. I'll go back. Now, will you still be loyal to us, or you will say to hell with him and take another classes? Probably another classes. Yes or no? Basically, what I'm trying to say is, on customer loyalty, company does not have control because it is based on customer action. If customer likes, he'll be with us. If customer doesn't like, he may move away from us. Yes or no? So no control, so not an asset. Hence those expenditure we will not capitalize as intangible asset, but gets, if you have spent something, goes off to SPA. Okay, great. Kamesh, you also got it, Amacha? He's like, I got it much before. I didn't have that doubt only. Okay, great. Carry on then. Any other doubts? Anybody? Okay. Deferred consideration. Deferred consideration. So this is also different or same? This is also something different or we have learned this. Deferred consideration means what? Remember, you purchased a property, plant and equipment. Normal credit was 3 years. But did you pay for that PP within 3 months or you took 2 years in that example? In the PP example I had given, yes or no? So that is the same thing over here. You purchased an intangible asset. Let's say there is a company A Limited. They purchased a software. Okay. The normal credit given for the software is 2 months. The software ka worth, let's say, is 10 lakh rupees. But this A Limited is making the payment after 2 years or at the end of 2 years. Now tell me, this transaction is happening on a normal credit basis or on a deferred credit basis? This particular transaction. The normal credit given for software is 2 months. But we are making the payment at second year end. So normal credit or deferred credit? NC or DC? NC for normal credit, DC as in deferred credit. What is it? We are obviously deferring the payment. Yes or no? Correct? So if there is a deferred credit, deferred consideration, we have already studied this. Then will you record software at transaction price, sir? Will you record the software at transaction price? Transaction price here is 10 lakh. Will you record it at transaction price? No. You will record at something known as cash price equivalent. Correct, no guys? The software will be recorded at cash price equivalent. Let's say that is 9 lakh rupees. Assumption. There is a way to calculate this. We have also seen also. Okay. So record the software at cash price equivalent. I've assumed this to be 9 lakh. Is there any difference between transaction price and cash price equivalent in my example? Yes. How much is that difference? 1 lakh. What will you do for this 1 lakh? This 1 lakh, 1 lakh is nothing but since you are delaying the payment, the vendor is asking 1 lakh rupees extra as interest. Yes or no? So this 1 lakh is nothing but time value of money ka interest charges. Where you will transfer that interest charges. The interest charges you will transfer it to SPL. In 1 year only? No, this interest charges will be transferred over 2 years because the contract term is 2 years. We put up that interest table. We have already done. Yes or no? That amortization cost table or interest table, unwinding of interest table, we'll put it and recognize this. Same as India 16, absolutely no change. That is what they've given here and now. Any doubts? So redeploying, please give an example. Software was already working, sir. Okay. I made some changes. I redeployed it again. I was producing one product using a software. I want to make a small change in the product ka maybe function. So again, I had to do some changes to my software to accommodate that. Like those. Those are your redeployment. Or maybe you worked on a particular software. Okay, it was working fine. Then like you made the changes later on. Some alterations basically, that's it. Any alteration made to intangible asset later on, not initially. The alterations that you make, we call it as redeployment cost. All that will go off to SPL. Fine now? Kalyan Garu? Okay, G? They're saying, okay, sir. All right. So this is your deferred consideration. Let's take up this particular example. You will tell me the answer for this. They've given various costs, sir. They've given various costs. In fact, maybe I'll just read this line. Jupiter Limited requires new energy efficient technology. They have purchased a technology. Okay. That will significantly reduce the energy cost of manufacturing. Some technology they have purchased. Is technology purchased an intangible asset? Any technology that you purchased, is it an intangible asset? Yes. So they've given various costs associated with this technology purchased. All you have to tell me is whether that cost will be added to the cost of intangible asset or whether it will go off to SPL. So purchase cost. So the cost of this technology is 10 lakh. 10 lakh can you add? 10 lakh can you add? Yes. What about trade discounts? Trade discounts that you have received. Well, that what you will do? Reduce. Correct? Okay. The training cost for staff in the new technology. You have given some training cost to staff. What is the training cost? You will add or SPL. This training cost you will ignore or rather it will go up to SPL. Perfect. Okay. If it is already included, what you will do? If this training cost, if it is already included, what you will do? you will exclude it or deduct it. Here they have not included. They have given all the cost independently. Okay. Hence this 50,000 training cost will straight away go off to SPL. Initial testing charges of the technology. What will you do for testing charges? Testing charges can you add? Yes, testing charges can be added to the cost of intangible asset. If you have received any proceeds from the testing, any proceeds received from the testing, you shall deduct. Not given, just saying. Losses incurred while other part of the plant shut down during the testing phases. Sir, initial operating losses. What will you do for initial operating losses and all? Will you add it to the cost of intangible asset or SPL? This also will go off to SPL. Any doubt? So that is what they've done. So basically take 10 lakh, deduct 1 lakh and add 35,000 to it. So that means it will be what, 9 lakh 35,000? That is your cost of intangible asset. This only is a solution. It was just an example. Any problem, anybody? This, if you want more clarity, loss incurred while other parts of plant shut down. You're doing some testing of intangible asset. So due to that, some other plant and machinery you shut down because you were busy focusing on this intangible asset. That other plant and machinery was shut. If other plant and machinery was shut that means you will incur some loss because you have stopped using plant and machinery, means maybe your production will reduce or whatever. Correct? So that they are saying. Okay. All these are your initial operating losses. Is that plant ka loss anyway related to intangible assets, sir? No, that is your some arrangement. Yes or no? So those you call it as initial operating losses, goes off to SPL. You cannot add it to the cost of intangible asset because it is not really a DAC. Fine, Garu. Everyone, Polama. Next to problems. Got it. Question number 5. Okay, let's see. This is based on your deferred credit concept just now we learnt. Venus Limited or Venus India Private Limited, they acquired a software. They did not develop a software, sir. They have purchased, as in acquired a software for its internal use. So they purchased this software not to sell it in the ordinary course of business, but for their own usage. For their own usage, they purchased. So is this software an intangible asset? Yes. Okay. How much did they buy it for? 10 lakh rupees. Excuse me. The amount payable for the software was 6 lakh rupees immediately, 4 lakh rupees in 1 year's time. Yo. Why? What is this? Your total cost of the software is 10 lakh rupees. In the 10 lakh, 6 lakh you're paying immediately, 4 lakh you're paying when? 1 year's time. Sir, you think, sir, will anybody give 1 year credit? 1 year credit, does it look normal to you or does it look like a deferred credit? This looks like a normal credit or DC as in deferred credit? Obviously, it looks like a deferred credit. Yes or no? So that means, can I add 10 lakh rupees as the cost of the software? No. Because this is the transaction price. I need to find out what? Cash price equivalent. Correct? Okay, that is one. Okay, or maybe we'll find out here only. So cost of intangible asset, we'll find it here only. It's a one-liner problem. We'll do it here. Nothing to be done here. So first, what is the total price you're paying for software? 10 lakh. In that 10 lakh, 6 lakh you paid immediately. So is there any problem in this 6 lakhs? Is there any problem in this 6 lakh? You paid immediately. No. Can I add 6 lakh to the cost of intangible asset? Can I add 6 lakh? Yes. Immediate settlement I will write. Or you can write amount settled immediately. How much amount did you settle immediately? 6 lakh. Can you add that 6 lakh to the cost of intangible asset? Yes. Can I add 4 lakh also to the cost of intangible asset? No, because this 4 lakh, is it the present value or is it the future value? Since you're paying this 4 lakh at the end of year 1, this 4 lakh represents your future value. But you are doing the intangible asset accounting now, no. So what we have to do? Find out the present value of 4 lakh. That present value of 4 lakh becomes your cash price equivalent. Did you understand? Cash price equivalent of 6 lakh is 6 lakh only. Because 6 lakh you paid it now only. But cash price equivalent of 4 lakh is not 4 lakh. It is a little lesser. Okay. But to find out the present value, we need discount factor. Have they given discount factor anywhere there? Check. Yeah, cost of capital. Cost of capital is nothing but your discount factor. What is the discount factor? 10% given to us in a problem. Can we find out that now? So the present value of 10 lakh. How do you find out that? 10 lakh into 1 divided by 1 plus I whole power n. Here, one second. What is the discount factor? I think 0.9090 it is, if my memory serves right. First year ka discount factor. So it's actually not 10 lakh. How much did you pay at the end of first year? 4 lakh. No? So 4 lakh into 0.9090 you do. How much is that? I'm getting 3 lakh. I think they must have shown also in the solution. Yeah, they've given here in fact. 3 lakh 63,600 is what my calculator is showing. Anybody having any problem? You paid 4 lakh, but you can account only 363. So the difference between these two, where it will go, sir? What is the difference? 4 lakh minus 363,600. What is the difference? That 36,400 difference, where it will go? It is your finance charges. Perfect. That is your finance charges, where it will get transferred to SPL. This is only for your reference. So no need to put up table. 1 year time, no. Okay, if it is more than 1 year, you will get more than 1 year ka interest. So then it makes sense to put the table. If it's only 1 year, then the difference is the finance charges. You can book it in this year only. So no need to put up table. Even if you put up the table, you will get the same answer. Not required, directly you can do is what I'm trying to say. Got it, everybody? Are we going fast? Is the pace fine for everyone? Unanimously? Everyone confirm? They're saying got it. Okay. Great. All right. Let me move on then. Okay. Is this the only cost that you have incurred or there are further? The other expenditure incurred were also there. Purchase tax. What will you do for purchase tax? If they don't tell whether it is refundable or non-refundable, if you assume it is refundable, do not add. If you are able to take the credit means, if you are able to take input tax credit, do not add. They have not given, you can assume anything. It's based on your assumption. Okay. So I'll assume that it is non-refundable, meaning input tax credit is not available. So I will add purchase tax. How much is that? Taxes? 1 lakh rupees. Okay. You can make other assumption also. Assumed non-refundable. So that's the reason I'm adding. All right. Anything else they've given? They have some entry tax 10%, but recoverable later from the tax department. If you are recoverable means now you are paying, later on you will recover it back. So on one hand you are giving, on another hand you are receiving it. Tell me, is it really your expenditure? Is it really your expenditure? No, you are paying and you are recovering. No. So that means what should we do for this entry tax? Should we add or ignore? Since it is refundable, what we should do? We should ignore these, correct? Yes. Legal fees. Sir, can you add legal fees? Yeah. Maybe this technology and all, the software and all requires registration. So we are paying some legal fees. Can we add legal fees? Very much yes. That is your DAC. How much is legal fees? 87,000 you can add. Okay. Then consultancy fees for implementation. Yeah, unless you implement it, can you use the software? Will the software become management ready for use? No. It will reach management intended use condition only after these the consultants have done the implementation or assembly. So is this necessary? Is this a DAC? Yes. So can you add 1,20,000 consultancy fees? Yes, because both are, these are again DAC. Okay. Then they've given cost of capital. That is your discount factor. That's it. If you add everything, how much are you getting? Total. I think that's what they've already done. 6 lakh, this. Adding, you're going to get 1270,636. That is a cost that to be capitalized as intangible asset in your books. Easy problem. Yes. These sort of questions easily can be fitted into MCQ driven. Whether institute will ask in your attempt or not is a different thing. That is their choice. But it could be easily fitted in a case study also. Any case study, random case study, they can simply bring this in. Okay. So how they choose, that is their headache. Let them worry about it. Can I go further? No doubt. Still you're good, no? Okay. All right, next. Intangible asset acquired as part of business combination. So I think I already gave you an example of that, right? Business combination is nothing but your amalgamation, as you used to call it. But in days, instead of amalgamation, they call it as business combination. Lot more, but this is the big ticket topic, business combination. We'll study it, but for now, there's a small concept from that which has come. So we'll study only the relevant concepts. Okay. Excuse me. Sir, tell me one thing. All intangible assets initially are recorded at what price? All intangible assets are initially recorded at what price? At cost price. Yes, no? Cost for this purpose includes your purchase tag, purchase cost, DACO, etc., etc. They're all the cost, correct? But what one exemption is there? For that rule, no, there is one exemption. All intangible assets initially are recorded at cost. That is the rule as per Ind AS 38. To this rule, no, there is a small exemption. What exemption is that? Is if you have purchased any intangible asset, if you have purchased any, let's say there is one company A Limited, they have purchased this intangible asset as part of business combination. They have got this intangible asset, whatever it is, license, software, technology, doesn't matter. If they have got any intangible asset as part of business combination, meaning let's say A Limited acquired Z Limited. A Limited acquired Z Limited. That means all Z Limited ka assets now belongs to A Limited. All Z ka assets belongs to A Limited. Z Limited had a software. Z Limited had a software or a license or a patent, doesn't matter. Now tell me, who owns the software henceforth? The software henceforth now belongs to which company? A Limited. Yes. So that means A Limited has to record this software in their books. Yes. This intangible assets purchased as part of business combination, no, will not be recorded at cost. It will be recorded at fair value. Did you understand the concept? Normally, as a thumb rule, all intangible assets are recorded at cost. But if you have purchased or if you have got any intangible asset as part of business combination, as part of amalgamation, some other company ka intangible assets you have got it as part of business combination, means only those intangible assets you record it at fair value. Everyone got this concept? I'll tell you the logic, but did you understand? Okay, this is a requirement of Ind AS 103, sir. Ind AS 103 says this. Someone is saying once again. Sir, okay, someone who said once again. What does fair value mean? What does fair value mean? Market value. Yes or no? We study fair value also in a separate standard, but for time being, fair value means market value. Okay. Now you think logically, sir. Let me put this example on hold. Let me take you probably another example. Sir, let's say there is a company P Limited. They had a land, sir, which they bought it for 10 lakh rupees. There was a company P Limited. They had purchased the land many years back by paying 10 lakh rupees. Now there is another company R Limited. No, they purchased of P Limited ka business. P Limited ka business R Limited purchased. R took over business of P Limited. Okay. All right. Now, that means P Limited will have to sell all their assets to R Limited. All assets, all liability of P Limited now belongs to R Limited. Yes. Okay. Sir, land ka carrying amount in P Limited ka books is 10 lakh rupees. The book value of the land in P Limited ka books is 10 lakh. The fair value or the market value of the land, let's say, is 90 lakh rupees. This is the market value of fair value. Now, you think logically, P Limited has sold its business. That means they have sold assets also. They will sell this land now to R Limited at 10 lakh rupees or 90 lakh rupees. They'll sell this land to R Limited for 10 lakh rupees or 90 lakh rupees. All of you answer for me here. Let's see. Obviously 90 lakh rupees. Yes or no? If you're selling something, will you sell it at book value, sir, or will you sell it at its fair value? Whatever is the value on that particular day, you would sell it on that day. Yes or no? Okay. So that means now you tell me R would have indirectly paid. R Limited is not buying one asset, they're buying the whole business. But when they buy whole business, they will get this land also, correct? This land also belongs to R Limited only now. You think and tell me R Limited has paid how much for this land indirectly? They paid total. But of that total, they have paid for land how much? Can you tell me, can you tell R Limited paid only 10 lakh rupees to buy this land? Can you tell R Limited has paid only 10 lakh to buy this land? No. R has paid how much to buy this land? 90 lakh rupees. Yes or no? And what is this 90 lakh? Is it the carrying amount or is it the fair value? Fair value. Yes. Now you tell me, whenever you do business combination, is carrying amount relevant or fair value relevant? You tell me answer to that statement. Whenever you do business combination, now for R Limited, what is relevant? Carrying amount of assets of P Limited is important or fair value of the assets of R? Fair value is important. Fair value is important. Yes or no? That is the reason IND AS 103 business combination says, if you have got any assets as part of business combination, now R will get many assets as part from P Limited because they purchased P Limited ka business. All those assets which R has acquired from P Limited, all those assets will be recorded at what value? Carrying amount or fair value? Fair value. All assets means this assets includes intangible assets. Okay, G. Now understood, huh? That is what this statement is also trying to say. Generally, all intangible assets are recorded at cost. Suppose you purchase any intangible asset as part of business combination, then you record that asset at fair value because you would have paid fair value to buy those intangible assets. That's all. Hence, this is a recognition exemption. But this treatment is specifically called out in IND AS 103. So, now someone said repeat, okay? Or others also? Is that thing sorted? Only business combination is an exemption. Rest everything at cost only. Which portion? Someone said repeat. What portion repeat? So if R, suppose same thing. Suppose P Limited had a software. P Limited had a software which they are showing in the books at 5 lakh rupees. The carrying amount of software in P Limited books is 5 lakh. Let's say the fair value of that software is 7 lakh rupees. Okay. Now tell me R Limited should record. Now they purchase P Limited business. R Limited should record the software in their books at what value? Now you tell me. R Limited should record the software at what value? 5 lakh or 7 lakh? R Limited should record the software at what value? 5 or 7? Fast. 5 or 7? 7 lakh. Yes or no? And what is the 7 lakhs? What is the 7 lakh? It's a carrying amount or it's a fair value? Fair value. Yes, no? That is what I said there. If you purchased, here R Limited purchased an intangible assets, separately they purchased intangible asset or they got it as per business combination? They purchased separately or as part of business combination? Business combination. So if you have purchased any intangible asset as per business combination, then record such intangible asset at fair value. Only those intangible assets. Now got it, huh? It's applicable for all PP and intangible asset. Yes. The standard IND AS 103 talks that all assets, whether PP or intangible asset, should be recorded at fair value. We'll come to that standard. Don't worry about that. That is IND AS 103. We're studying only intangible assets, no? So I'm only talking about intangible assets. IND AS 103, there are many things. It's a big standard. So we'll take some time to do it. We'll get there. Maybe another 3 to 4 weeks ahead of me. I'll catch up with you. I told you, I'm a little slow. Kindly adjust ಮಾಡ್ಕೊಳ್ಳಿ. Okay, great. And what about goodwill, sir? The goodwill that you get from business combination, will you record it as under IND AS 38? Will you apply IND AS 38 ka treatment for goodwill? No. The goodwill that you get from business combination is not accounted as per IND AS 38. It is accounted as per business combination ka standard, which is 103. Okay, that I already told you there. In the first only I gave you example. Remember? Somewhere here I wrote this example. This one. This goodwill that you get over here. This goodwill of 2 lakh will be recorded as per IND AS 103 and not IND AS 38. Excuse me. Can I go for the next question then? If that's clear. We'll do a few more questions and then take a break. That's fine with you? Another maybe 15-20 minutes we'll do it and then take. That's okay? Yeah, perfect. That is acquired goodwill, correct. There is another goodwill also called self-generated goodwill. That concept is there. I'll come to that. Yes, this goodwill that you get from business combination, we call it as purchased goodwill or acquired goodwill. Correct names. The purchased goodwill or acquired goodwill will be accounted as per Ind AS 103. If you have any self-generated goodwill, I think we already discussed this in interstage only, AS 26. Maybe that you are remembering, no problem. We'll come to that. That concept is also there. Again, little ahead, that's all. Okay, question number 6. On 31st March 20X1, Earth Limited paid 50 lakh for 100% interest in Sun Limited. That means Earth Limited has acquired Sun Limited, can I say? Earth has acquired Sun by paying how much? 50 lakh. What do we call this 50 lakh as? Purchase consideration? PC. Amount paid to the owners of selling company, we call it as purchase consideration. So the purchase consideration here is 50 lakh. Great. At that date, Sun Limited ka net assets had a fair value. If you just check, they've only given fair value. We know that whenever there is business combination, carrying amount is relevant or irrelevant. Carrying amount is not relevant. What is relevant for us? The fair value. That is what they've given over here. So Sun Limited ka net assets had a fair value of 30 lakh. Oh, yo. Huge loss, no, sir. Sir, they're not talking about assets. They're talking about net assets. How do you get net assets, sir? How do you get? Name itself is saying net assets. From the assets, if you deduct the liabilities, that netted off number only we call it as net assets. Okay. So from the assets, they've already deducted the liabilities. So the net assets is 30 lakh. That means net asset only is the net worth of the business. No? Net asset only we call it as worth of the business. How much is the business worth? 30 lakh. But how much did the buying company pay? 50 lakh. So the purchasing company made a bumper profit or bumper loss? Purchasing company. Purchasing company made profit or loss? Loss. Correct, no? Because 30 lakh worth of assets, net assets, they purchased by paying 50 lakh. Okay. So that means they paid 20 lakh extra. That extra only we call it as goodwill. Yes. But hang on. They've given few more words. Let's read that. In addition, Sun Limited, that is a selling company, they also had the following rights. Trademark named Grand valued at 1,80,000. Trademark named Grand 1,80,000 using a discounted cash flow technique. Sir, they're saying in addition. In addition means this particular trademark and all is included in this 30 lakh net assets or not yet included. In addition, they're saying they're using the word in addition. In addition means this 180 is included in this net asset calculation of 30 lakh or not yet included? Not yet included. Perfect. Okay. So they had a trademark named Grand whose value they're saying is 1,80,000. Perfect. They've already valued this using discounted cash flow technique and they only told value is 180. They also had a sole distribution rights to an electronic product. The future cash flow from this are estimated to be 1,50,000 per annum for the next 6 years. They have some distribution rights and they're saying from that distribution rights, you'll get 1,50,000 every year. Just for 1 year or for the next 6 years? Next 6 years. So this 1,50,000, is it the present value or is this a future value? This 1,50,000 that you will get over the next 6 years. It's the future value. Okay. That means is the today's value of that right 150 or something else? You have a sole distribution rights. Okay. So that this 150 is a today's value or future value? Future value. So let's find out the present value of that sole distribution rights. How much is that? Present value of sole distribution rights. How much is that? 1,50,000 you are getting every year, no sir? Okay. So that means you want to put up, and the discount factor they only given in the problem. Check. 10 years is considered as an appropriate discount rate. 6 years you will get the cash flow. Every year cash flow will change or it will be same. Every year cash flow will be same, change or it will be same. Same. That means one method you can do is year 1, 2, 3, 4, 5, 6 you can do, and you can put cash flow here as 1,50,000. All the 6 years ka cash flow is 1,50,000. Then multiply discount factor. Yes or no? Fine, this is one way to do it. Or there is a shortcut method which many of you would have already done in your FM. What is a shortcut method? A particular year ka discount factor, we call it as PVIF, present value interest factor. Okay. If you check mathematically here, all these numbers are common, no? All these numbers are common. Then instead of calculating it 6 times, what we can do is add up all the discount factor. For all the 6 years ka discount factor, you can add. When you add all the 6 years ka discount factor, that added number we call it as PVAF, present value annuity factor. So we can use that calculation. All of you, I think, have done this in FM. Can I straight away put it as a one-liner? You can put it as table also, but just I'm thinking it's fine. And if you want me to show or got it, just to be safer side, I'm asking. Present value factor, PVAF. Those of you have any problem, only those of you respond. Otherwise, it's okay. No, they're saying good. Okay, so how do you get this now? 1,50,000 is your cash flow. Multiply it by present value annuity factor at 10% for 6 years. For 6 years. So should we have to calculate this? I think check. The problem is very nice. They only calculate. The 6 years, 10 years annuity factor is 4.36. They only given such nice problem. So this means that is nothing but 1,50,000 into 4.36. Correct? So calculate. 1,50,000 into 4.36 gives us 6,54,000. Okay. So the present value or the fair value of as on today of this distribution rights is 654. Can I say so? The fair value of the distribution right today is worth 654. Is my statement right, sir? There's nothing but your fair value. Comfortable? The value of that distribution rights as on today is 654. No audio. Someone is saying no audio. Audio issue. Looks to be running fine for me. Anybody else facing the audio issue? No, they're saying. Okay, fine. So is my statement right? So the fair value of this distribution rights is 6,54,000. Okay, great. Now, this 654, is it included in net asset of 30 lakh or not yet? This 654, whatever we just now found, is it included in this net assets or not yet? Not yet. Correct? Okay. Now tell me, will you just compare 30 lakh with 50 lakh and find out goodwill, sir? Or will you include these two assets also? Got my question? Will you just compare 30 lakh with 50 lakh and conclude goodwill as 20 lakh? Or we have to include this other things also? We have to include other things also because these are also assets for the Sun Limited. No, they have not recognized this assets. Why? I'll tell you in a bit. They are self-generated assets. For self-generated and all, no. Okay, there are some conditions. If condition is not satisfied, then the selling company cannot recognize this as an asset. We'll come to that. Okay, but you think the selling company has now sold its business. They have sold their business. If they've sold the business means, won't they collect some money for this also? They have a brand means they will let go of this brand as it is or they will recover some money for that also. For brand also, they will recover some money from the purchasing company. Yes. And from distribution rights also, they will recover. Correct? That means purchasing company has paid 50 lakh. The purchasing company has paid 50 lakh only for this net assets of 30 lakh or even for other two assets also. Purchasing company has paid 50 lakh not just for this 30 lakh of net assets. They paid this 50 lakh for some brand also. And they paid some money for sold distribution rights also. Hence, these three things you have to compare with PC to get goodwill or capital reserve. Goodwill. For now, we'll stick to goodwill. We'll talk about capital reserve later. Did you understand the meaning, everybody? Repeat. Got it. Yes. Okay. So we got the fair value of brand. Next, what I need to consider? The brand. In fact, fair value of distribution rights, I got it. Brand ka fair value. So do I know the fair value of the brand? Should I have to calculate or they only calculate it? In fact, the trademark or brand ka, it's named as Grand. Its fair value is 1,80,000. They have only done the valuation. So I don't have to do. So the fair value of that particular brand or the trademark is, if you don't want to use the word brand, I think I can use the word given there only, trademark, is 1,80,000. Then we have some other net assets also. What is the fair value of other net assets they've given in the problem? 30 lakh rupees. Okay, that means now can you tell me what is the total net assets of the selling company? The total net assets of selling company, D, I'll call it as A plus B plus C. So how much is that? 30 lakh plus 1,80,000 plus 6,54,000. That means the total is 38 lakh 34,000. This is the worth of the selling company. This is the worth of the selling company. But how much did the purchasing company pay as purchase consideration? For 38 lakh 34,000 worth of business, the purchasing company paid 50 lakh. So did they pay anything extra? Yes, they paid some extra. That extra only we calling it as goodwill. I'll call F as E minus D. So 50 lakh minus 38 lakh 34,000 gives you 11 lakh 66,000. This is your goodwill. This goodwill, we say it is the purchased goodwill or acquired goodwill. This goodwill is accounted as per IND AS 103 and not as per IND AS 38. That's what they've got the answer here. Goodwill on acquisition is this much. This problem is over. Can we move on to the next? Doubt? Next, what? Got it, sir. They say, awesome. I tell you, people are brilliant. Acquisition by the way of government grant. You have studied government grant. Okay, in accounting standard 12. It was there in your CA intro also. You have a standard also. Corresponding standard in CA final is IND AS 20, which talks about government grants. Same thing we'll learn there also. But let us come here. So we'll just quickly kind of go. We'll finish off this. Okay. Acquisition by the way of government grant. Let me give you a small example. I think I had already told you this. Indigo Airlines. So they have many aircrafts. Sir, can they park this aircraft just like that, or they need to have one right? Can they park this aircraft in the airport, any airport as they please, or they should have some rights? They should have some rights. What do we call that as, sir? Landing rights. Okay, to use the airport's facility and all, the company has to take some permission from the aviation ministry or government or whoever, whatever necessary authority will give the permission. That we generally refer to as landing rights. Okay. Now, Indigo Airlines started this airline business. They submitted application for this landing rights because unless they get this landing rights, they cannot start their operations. Okay. So they applied for this landing rights. Excuse me. Government of India, let's say, gave this landing rights. I'll call this as LR. Gave this landing rights to Indigo Airlines at free of cost. Government of India told, no problem. I want more and more companies to start the airline business, aviation business. I'm happy that Indigo Airlines, you have started this business. So I am giving this landing rights at free of cost for you. But the worth, the fair value of this landing rights, let's say it's 10 crore rupees. The worth of that landing rights is 10 crore rupees. And did the government charge even a single rupee or a single penny from Indigo Airlines, or absolutely free? Absolutely free. Yes or no? Okay. So if this has the scenario, means what should Indigo Airlines do for this landing rights? That's the concept we are studying. Now, landing rights is an intangible asset. Okay. Landing rights is an intangible asset. This intangible asset, how Indigo Airlines should record in their books is the concept. Fine. Anybody remembers AS12 ka concept? You have studied this. If you have received any grant from the government at free of cost, there was a concept. It was there. What will you do? AS12. Anyone remembers AS12 ka concept? Deduct it from the cost of the asset, they're saying. No, this is not asset cost reduction method we are talking about. No. This is at free of cost. Perfect. If you have received any grant, from the government, AS12 used to say, record the asset and grant at nominal value. If you have received it at free of cost, record it at nominal value. The nominal value could be 1 rupee, 100 rupees, 1000 rupees, whatever. Just show that intangible asset in your books is what you used to say. IND AS 20 also gives, IND AS 20, in fact, AS 12 gave only one option. But should we have to follow accounting standard now or IND AS? We are in CA final. So the relevant thing for us for our exam is IND AS. So IND AS gives two treatments. Okay. What IND AS 20 says is, okay, you have received this intangible asset at free of cost. No, one option is record both intangible asset and government grant. Record both. No audio again. Huh? Is audio coming and going? Is audio fluctuating? Yes, sir. Oh, that's crazy. I've never seen this. Like, how often it's happening? It's breaking a bit, or what is it? Now also breaking, huh? For 1 minute it broke, hey? That is too much, no? Sometimes, no audio. Someone is saying no audio issue for me. It's perfect for me. Okay, then it's not breaking. Hey, that how to answer now. Maybe then is it your internet issue then? Because many of them are saying it's not breaking for me. That means probably your internet issue then, guys. Not sure. Okay. All right, we'll see what to be done. Okay. All right. So one option is, if you have received any intangible asset from the government at free of cost, then record both intangible asset and government grant at fair value. Record both intangible asset. Intangible asset here is your landing rights. Both record intangible asset and deferred government grant, meaning the journal entry you passes. Landing rights account debit. Landing rights account debit. What is the fair value I assumed? 10 crore rupees to deferred government grant account. To deferred government grant account, 10 crore rupees. This is one option. Record both grant and intangible asset at fair value. What to do for this grant, how it works and all, we'll study in IND AS 20. Do not worry about this for the time being. Our topic is restricted right now to intangible asset. So we'll stick there only. How this works, the disclosure and all, IND AS 20 we'll learn it in detail later. Fair with first option? Or if the company, this is company ka choice. If they want, they can record it at fair value, or if they want, they can record it at nominal value. Both are there. Both option is given. What is nominal value, sir? The nominal value could be 1 rupee, 100 rupee, 1000 rupees, some small value. Just for the sake of showing this asset in your books, show it at one particular value. Both the treatments are acceptable as per the provisions. Did you understand the meaning? Comfortable? That's what they've given here. Any confusion? Got it. Either go for fair value or nominal value. Done? Okay. Sir, suppose the fair value of the landing rights is 10 crore, sir. But this time government is not being so Daral Prabhu Karna. They told, give me 1 crore for landing rights. Landing rights ka fair value is 10 crore. Is the government giving us the landing rights at free of cost this time? No, they're charging us. How much they're charging? 1 crore. Sir, if this is the case, means what will happen, sir? Same thing. If this scenario happens, means record both intangible asset and government grant at fair value. What is the fair value? 10 crore. Record both intangible asset and government grant at 10 crore itself, being the fair value. Or record it at the concessional price. Here you have got some concessional price, no? Record it at concessional price. If you have got it at free of cost, record it at nominal value. Okay. If you have paid a lesser price, record it at that lesser price itself. Here, how much have you paid? 1 crore. Record it at 1 crore. Understood, everybody? Okay, that's what they've given over here on this. Okay. And what about DAC and all? What about DAC and all? DAC and all, can you add? Meaning if you have got some patent, if you have to register the patent, okay, that registration charges and all DAC. What will you do for normal DAC? Normal DAC and all will be added to the cost of the asset. This plus the DAC. Okay, whatever you have incurred plus the DAC concept is normal. Any directly attributable cost, whatever you have incurred, you can add that. That is all right. That concept is usual. No change. Fine now. Need a minute to collate anything or next concept? Or do you want to take a break and resume now? Want to take a like 10-15 minutes break and then do you want me to start over? If you have reached a little bit of zone, I think it'll be this. Sir, if recorded at fair value, should DAC be added? Actually, that treatment, the company is silent. I would say you can still add it. Yeah, DAC is a separate thing. You still add it is what I would say. Or you could adopt another school of thought. Fair value means it's a comprehensive value. No, fair value means it includes every value. So that means you could say DAC is already included and take that stand not to add also. It's a little subjective. Okay, you can take a multiple stands there. In my view, it could, the fair value or DAC can still be added. Okay, my opinion. Fine. And standard also kind of gives that only. Matlab standard says for fair value do not consider because they have not used anything. Only for nominal value they've said add DAC. Okay, they have taken a stand that if the intangible asset is recorded at fair value, do not add a DAC. Because fair value will include a DAC is what their assumption is. Okay. However, if the intangible asset and endowment grant, if it is recorded at nominal value, then add a DAC is what the stand they are taking. But in my opinion, other one is also okay. Your choice. That's a little subjective. Yes. Now your call. What is it? Continue or break? Maybe we'll take. I think we took some time. No? Okay. Well, let's do a thing. Let's take about 10 minutes break and we shall resume back. 8:15. We shall come back. Okay. Thank you.